What's up, YouTube? Facebook just reported Q1 earnings for 2020. We're going to walk through the 10Q. All right, here we go. Facebook just reported Q1 earnings. You can come here and listen to a webcast. You can kind of look at the slides. You can do all that stuff. What I like to do is jump all the way down here into the quarterly report, the 10Q. I have it up here for our convenience. Here we go. They all start out like this. We got the company name, we got the address. You got a phone number if you want to call them. I don't know if Mark Zuckerberg will pick up, but you can give it a shot if you want. First thing we always check is what these figures are in. When we got a big, gigantic company like Facebook, they're often in millions. So that means you need to add 6 zeros here. This is not 23,000. This is not 23 million. This is 23 billion with a B. So that's pretty impressive. Okay, if that was your bank account, I think you'd be feeling pretty good right now. We got December, and then we want to see the time frame. So we've got December to March. So this is just kind of a Q1 view. So January, February, March view into the company. We've got cash and cash equivalents, again, staying relatively constant, marketable securities as well. So when you want to total up how much cash, quote unquote, cash Facebook has, well, this is straight cash in the bank. This is like what's in your Bank of America account. This marketable securities, I would compare this to maybe like your IRA account, although they're going to invest in things that are quote unquote far more safe, like government bonds and treasuries and things like that. So this is almost like cash, although it's not. So in totality, we have close to, what's that, 50, 60 billion dollars or so in straight cash homie. So that's pretty nice. Accounts receivable. This is interesting because we have the virus and all that going on. Accounts receivable may not be as good as gold as it used to be. Okay, we got people not paying their rent, got businesses closed. So this number might, there might be more charge-offs and, different kind of things not necessarily for Facebook. I'm kind of walking you through this. So when you analyze other companies in the next 3 to 6 months, certainly like REITs or mortgage, anything that has to do with rent or anything like that, a mall operator, this accounts receivable number might be written off considerably. Not necessarily the case here with Facebook, although it could be. You have businesses go out of business and then they don't pay for their online ads, because that's primarily how Facebook makes their money. We've got prepaid expenses here. Come down to the total current assets, almost all cash, about $69 billion there. That's pretty nice. Then we've got some property and equipment. All in all, we're looking at a small growth here. And I say small, it's actually considerable when you factor these figures are in millions. We went from 133 billion to 138 billion and some change in terms of total assets here down on the asset side. Now that gets balanced off on the liability side. We have accounts payable, we have partners payable, we have all these things. Let's just scroll through this and we'll get down. Look at this. This is what I want to emphasize. People wonder why these tech companies like Facebook keep going up and up and up. Look at this. $138 billion on the asset side. 33 billion on the liability side. Guys, imagine if you had, let's just say this is 138,000. You had $138,000 in the bank and you only owed people $33,000. You'd probably be feeling pretty good about your financial situation. And so obviously Facebook is as well. So excellent numbers there. Considering the virus, considering kind of the slowdown you probably have been seeing in ads and things like that on the platform, this is a good sign, at least for Q1. Total stockholder equity, again, it's very similar to what we have going on up here. We've got the total shareholder equity and things like that. Again, on a quarter-over-quarter basis, it's not exploding because Facebook is kind of a relatively mature company in terms of their market and things like that. So you're not going to see these numbers explode like you might maybe in their early days. Here we go, statement of income. So we have a top line revenue. This is top line revenue number. Notice that it did grow. Okay, so we're looking at 3 months ended March 31st. So this is January, February, and March. Here it is back in 2019. Here it is in 2020. So despite the coronavirus and stuff like that going on. Obviously, a lot of businesses are closed. Businesses, especially like travel and airlines and things like that, are not advertising. Hotels, casinos, there's just a lot of, and then all that trickles down. Restaurants, they're not advertising right now. But you did see it did eke out, a small top line gain. So that's excellent. Now, how is Facebook how is Facebook managing their expenses? They have lots of employees. They have to have computers and servers and lawyers and all that other stuff. Let's take a look here. So this, again, staying relatively, keeping in mind that revenues grew about $2.7 billion in the quarter over a year ago period. We see a slight uptick in the cost of the revenue. Research and development ticked up a little bit there. Marketing and sales ticked up a little bit. Just a small amount. Now, here's a really interesting line. Look, we went on general and administrative, we went from 4 billion down to 1.5 billion. So that's actually an impressive drop. We'll find out later as we dig into this. One way you could do that is do like a find and replace on this document and just search for general and administrative, and you'd see every time this document mentioned this, we could then scroll down to, why did this go to 1.5? They're going to explain it a little bit later on. We'll get to that. So total costs and expenses, actually very much in check. Again, we grew top line by over $2 billion, and take a look. The total costs and expenses barely grew. So people wonder why these stocks, we can go maybe stretch this out a little further. Why does this stock keep going up and up and up? Yes, there's some down dips and things like that, but this stock was $80 5 years ago. Now it's over $200. Why does it keep doing that? Well, probably because they keep growing their revenue every quarter and total costs and expenses stay relatively in check. That's pretty impressive for any company, but especially someone like Facebook as well. We've got income from operations. Again, it really drove by this decrease, you got the top line increasing, but then we really dropped this general administration line. And so, there we go. Drive some nice income from operations there. Coming down to kind of a net income number here. This is a GAAP figure. This is, by the book, essentially, from an accounting perspective. We went from 2.4 billion up to 4.9 billion, nearly $5 billion. That's over a double in terms of net income. That's super impressive. And that's awesome. And so from an earnings per share perspective, again, you're expecting not close to a double here because, again, look at what they're doing to the share count. Actually, it's stayed relatively constant. That's really interesting. So they are probably compensating some of their employees with shares, but I believe Facebook probably has some kind of buyback. I do believe they've authorized a buyback. So this number of shares outstanding is actually staying very much in check. So that's very, very positive if you are a shareholder of Facebook. And I probably should mention that I am a shareholder of Facebook, and take that into account as we walk through the rest of this video. Share-based compensation, they're showing you, how much they are compensating their employees in terms of the share-based compensation expense here. And so here it is included. Very nice. You obviously want the company to reward their employees, and if they can compensate them with shares of the stock, it's not a big deal. Again, we come down here. This is a net income, and then we've got kind of a foreign currency. This is not, when these numbers don't change a whole lot, I would almost ignore this. Like, who cares about $300 million when you're talking about $5 billion? It's almost like a rounding error, so I wouldn't really worry about that. When you see big changes from here to here, then you might want to see what's going on there. Now we've got the statement of cash flows. Really love walking through this because it gives you a deeper understanding of how the cash is flowing through the business. So again, we've got a 3-month view here from 2019 here, and this is the current quarter here. We cleared nearly $5 billion. We have some depreciation. Here's share-based compensation. Look how big that number is, okay? And so this is not cash coming out of the bank account. This depreciation number, not necessarily cash coming out of the bank account. That's why companies kind of do these adjustments of net income to kind of give you a different idea, because net income is a GAAP number. It is by the book accounting. But if you want to really dig deeper and say, well, this depreciation number, this stock-based compensation number, some deferred income tax, I actually would toss that back in there. That's something you're going to probably have to pay anyways. And then we've got accounts receivable. This is kind of changes in assets and liabilities. We've got accounts receivable. These are all relatively small numbers. Look at this. Accrued expenses and other current liabilities. It was big over here and now it's little. So that's interesting. That's something you could investigate a little bit more. But overall, we got 19 here and 20 here, and we're seeing a nice little uptick, which kind of mirrors what we saw with the top line. As long as the bottom line is kind of mirroring what we're seeing with the top line, these expenses all seem very normal for me, not bringing up any kind of red flags. Cash flows from investing activities. For some companies, this is a little bit more significant, but for Facebook, they're really just buying marketable securities, which is like government treasuries. They're parking their cash somewhere, okay? It's not, when you have billions of dollars, you don't just leave it all in a bank account. You do something with it. And so that's kind of showing you what's going on here. They're showing you this amount of money left the cash balance, left maybe cash, and then kind of got used to something else and some kind of other investment and things like that. This is cash flow from financing activities. So notice, here we go, repurchase of stock. So this is what they did last year. It looks like they've accelerated that. That's actually pretty nice. You like to see that as a shareholder. That sometimes helps, either support the stock on the way down or kind of continues like an uptrend. So that's kind of nice to see. Keep moving on here. Here we go. We got cash and cash equivalents. If you want to see like what's the year over year kind of view on this, you can kind of see like, okay, here's how much cash they had last year. Here's what they've got this year. Again, that's straight cash. I don't think this includes marketable securities and things like that. So you might want to keep that in mind. Here's an interesting slide here. We're on page 15 here of the 10Q. And notice here they're breaking down their revenue. They've got advertising. Look at this. Okay. And look at other revenue. So Facebook is an advertising company. They make almost no money doing anything else. And so that's when you analyze this company, when you compare this company to somebody else, make sure you're in comparison in the advertising business, because that's the business that they are in. Here's a slide that shows you how it breaks down by geography. So we have the United States and Canada, Europe, Asia Pacific, and the rest of the world. And the only thing that I really see interesting here is we've kind of got now an even split, like half and half. So we've got $8 billion here in the North America, and then the rest of the world, if you add this up, it's about $8 billion, probably slightly over. So that's actually pretty cool. There are the company is kind of 50-50 split between North America and the rest of the world. Certainly going to feel the impact. A company like this is going to feel the impact of the coronavirus, from the advertisement, business throughout the whole world. But, as these markets start to come back, you'll see these numbers likely start to tick up. So earlier I was talking about these marketable securities, and here they are. If you ever want to know what they are, here's how much they have in US government, here's what they have in a money market fund, here's what they have in other US government things, here's, corporate debt and things like that. And so it breaks it down here. This is not anything that I would really run out and try to find a lot of information on, but I just wanted to point that out. Now, deeper into the 10Q, Facebook starts talking about their user metrics. They tend to lead with these kind of things. If you go to the company slides and kind of the earnings release, they're going to talk a lot more about this stuff, and certainly is important. The one thing of note here, as we're kind of seeing like an acceleration, I think it's totally understandable when you talk about the coronavirus. People are at home, people are not working, so they are kind of maybe on their phone or on their, their computer more. And so we're seeing daily active users actually kind of accelerate up a little bit. This graph has obviously been trending pretty steady up, and I see a little bit of an acceleration there, so that's definitely a good sign. And they start breaking it out through the different geographies. Certainly something, if you're a Facebook investor, you want to see these numbers continue to kind of go this direction. Although, once you reach a scale that Facebook is at, continuing this up will become difficult at some point. Once it becomes difficult or these graphs starts to go negative, I doubt they will include them in these 10Qs. So it's just interesting to note why they do that. Here's revenue. This is kind of interesting. Notice that we had a drop in revenue from Q4 here to Q1. But if you look back to last year, you had Q4 here and then you had Q1 here. So there is a drop off typically because this is probably Christmas and holiday traffic. There's a lot of advertising related to Christmas here, and it looks like it always tends to kind of drop off and then pick back up as you move through the year. So it'll be interesting. This is probably the most interesting thing to see with Facebook and then Google and the other advertising companies. You're going to have this drop from Q4 to Q1, and then we have the coronavirus. Will it pick back up through the rest of the year, or will advertisers stay on the sidelines and you'll get this like negative trend? That'll certainly something to watch for as the rest of the year, plays out. Now we're at the kind of towards the end of this 10Q, but there's some interesting stuff down here. So we have cost of revenue. We went through these numbers earlier, but what it's going to do is it's going to break this down. So it's going to have research and development here, and it's going to have the figure that we saw, the kind of year over year number, and it's going to show you the change. But the most interesting part about this is they explain it here. They say, the increase was primarily due to this payroll and benefits expense. So if you want to know why research and development was up 40%, like I said earlier, you can do a find and replace for this maybe phrase right here, and then eventually you click down to here. If you didn't know where it was on the 10Q, you click down here and it'll explain it more. Now, the interesting part I want to show you is, remember that we saw that this general and administrative went down actually quite a bit. And here's where it's explaining that. Remember, we saw general and administration go from $4 billion expense in 2019 down to $1.5 billion. That's actually quite a drop. It's a 61% drop year over year. Now, here we are. They're telling you right here why it went down. It decreased $2.5 billion because we had a $3 billion legal accrual related to an FTC settlement. So Facebook reached into their wallet last year and pulled out $3 billion with a B and then gave it to essentially the United States government. And they didn't have to do that. Luckily, that's not a recurring expense, although some people might argue that they have more of these coming. But here you go. That's why you saw revenues drop. The general and administration costs drop 61% over the year, and that helped drive up a profit in the quarter and certainly through this year. So that's very cool. And that's pretty much going to wrap it up on this Facebook. Really, you saw it's a really clean and simple company. This is why I like going over Facebook, because they're almost 100% ads. They haven't borrowed a lot of money. They're not doing a lot of really fancy things like you might find in some other companies. They're just kind of churning their platform out. And so we saw revenue increase. We saw, total cost and expenses stay very much in check, in large part because there was that $3 billion settlement that they paid last year. That didn't reaccrue this current quarter. And so we're seeing a nice steady increase in income, net income, earnings per share. They're keeping the share count in check, very much flat, if not going down year over year. Guys, there's a reason why these stocks keep trending up and up like this. And then notice we have this really nice move this last year. It hit in this 150 range just a few weeks ago, really. And now Facebook really moved up over that $200 per share again, and it's inching back to an all-time high, which is kind of in that 220 range. So we'll see what happens through the rest of the year. I would, if I was an investor, I am an investor in Facebook. The thing I'm looking forward to is the coming months. Will the revenue keep increasing month over month, year after year, because of the virus, or will we see a downturn in terms of revenue? That'll be really curious to see. Obviously, engagement and users are going to be there, but will the advertisers be there? That's the question that we have going forward. But for now, Facebook looks pretty good to me. Thanks for tuning in. Hit that like button. Leave me a comment. Let me know what company you want me to do next. I'll be back again. See you guys.